Canada's housing market is doing something weird. Inventory is flooding in, sales are slipping, and yet prices barely budging. In some cities, they're even hitting new highs. So, what are we looking at here? A crash in slow motion or a soft landing? Or just more market noise wrapped up in headlines? Look, I get it. Every month seems to bring some big shift that doesn't really go anywhere. So let's not jump to conclusions. Let's look at the numbers across four major cities and see what's actually happening. If we haven't met yet, I'm Richard, Canadian real estate agent, here to help you make sense of this market without the noise. If clear, data-backed updates sound helpful, hit the like and subscribe so you don't miss out on the next one. Now, before we dive into each specific major city in Canada, let's start off with the bigger picture here. Home sales across Canada rose 1.8% month over month, hinting that the market may have bottomed in Q1. Affordability is improving on paper. Average mortgage payments are just over $2,600, which is the lowest since 2022. Interest rate speculations are heating up as many expect just the Bank of Canada to cut rates in June, which really could shake things up here. But here's the key. Even though conditions are technically improving, confidence is still fragile. Buyers are hesitant, sellers are adjusting, and local markets are reacting very different depending on price point, supply levels, and just demand overall. So what's really happening city by city? Let's kick things off with Vancouver, where sales are down 15%, listings are up nearly 65%, and for the third straight month, prices have slipped. But this isn't just a collapse, it's a rebalancing in my opinion. So here's what you need to know. Sales last month was 2,831 homes, which is just down 15.1% year over year. Then the new listings that hit the market were at 7,092, which is actually up 64 or almost 65% year over year. So lots of new inventory. And then the total inventory right now that we're seeing is at 12,491 active listings, which is up 42% year over year. So we have lots of new inventory, lots of activity. As far as new listings hit the market, which is no surprise here. Then looking at the MLS benchmark price, which hit 1.2 million or just over $1.2 million, which was actually down 0.1% month over month. And then when you're talking year over year, down 0.7%. So it's kind of the similar trend over the last couple of years, as whereas prices really haven't moved that much. Then we have sales to active listings ratio, which is essentially just a ratio between how many sales are happening versus how many active listings we have. And it's sitting at 23% right now in Vancouver, which is trending towards more of a balanced market. And so for those who don't know percentages, under 10% is going to be a buyer's market. Above 20% is a seller's market, and in between is more of a balanced market. But let's just break this down property by property. So the detached home segment, sales were at 814. Benchmark price was sitting at $1.972 million, which was down 0.9% month over month. Then moving on to apartments, where these sales last month were 1,416. Benchmark price was just about 800,000, sitting at 788,000, which is down 0.1% month over month. And then townhomes sales were sitting at 591, where the benchmark price was just under 1.1, sitting at $1,094,000, which again, month over month was a 0.2% decline. Now, what caught my eye this month was the apartment segment. Despite just a dip in prices, sales activity remained relatively strong because if you look at the sales data, it actually made up 50% of all the transactions. But inventory is also piling up fast. So if this trend continues, we could just see more of a shift towards the buyers heading into the summer. Then I just want to talk about some regional trends and just some neighborhood callouts that I think are worth mentioning here. West Vancouver, the detached benchmark is sitting at 3.27 million, which is flat month over month. And then the sales to new listings ratio was down to 20%. So again, tipping towards more of a balanced market. Burnaby East just hit 21% as far as the sales to new listings ratio. Then when it comes to Surrey and Langley, we got lots of inventory on the market. There's a slight softening in prices, so be wary of that. And then when it comes to New Westminster, we're still seeing a decent condo activity. Then when it comes to Maple Ridge, it's more balanced than most other regions. So I'm seeing sellers and buyers just coming to grips with reality more than these other segments. Overall, we are seeing just a rebalancing across the region, but there are certain markets that are adjusting faster than others. So depending if you're a buyer or seller, just keep that in mind. Now, we've gone over a lot of data and insights here. So what does this actually mean if you're thinking about buying or if you're thinking about selling your house and moving to a different location? So buyers, I want to start with you first. You've got more choice right now than you've had at any point this past year or for a while, really. And so prices are softening, sellers are becoming more negotiable. If you're shopping for a condo, especially in West Van, Burnaby, or even Surrey, there's going to be lots of opportunities just to negotiate well below ask, but particularly on units that just have been sitting on the market for weeks or even months because inventory is growing. Just keep in mind that if rates do drop next month, which translates into more buyers likely jumping back into the market, which again translates into reducing your overall leverage. So just keep that in mind. And then when it comes to sellers, your biggest challenge right now is just going to be standing out. Buyers have a ton of options right now because listings are just growing and they're really not rushing into anything. So here's the strategy. You need to price it right from day one. Don't go after last year's prices or even COVID prices because that's just not realistic. And then you need to prep and stage your home to create impact, right? You have so many listings that you're competing with that you really do want to stick out. So stage to impress. Expect longer days on market and just be willing to negotiate. You have to. And if you're in hot pockets like North Burnaby or East Van, you might still see some activity, but just across the board, the urgency has definitely faded. Last month was a bit of a turning point in my opinion. Inventory is continuing to build, sales are continuing to slow, and prices are beginning to bend, and we can really see that in the data. But this isn't really a crash in my opinion, it's more just a rebalancing of things. Now let's move east to Calgary, where the inventory surge is at 115%. It's kind of crazy. But the market still feels surprisingly tight in some segments. Detached homes seem to be holding their value, but apartments are under pressure. So let's just take a closer look. And to do that, let's break down some numbers here for the last month. So we got sales here. Previous month was 2,236 homes sold, which is down 22.3% year over year. And then the new listings, they're up 15.7%, which is at a total of 4,038. And then the total inventory on the market right now is 5,867 homes on the market, which is that big increase we saw, which was 115%. It's crazy. And then the months of supply, we're up to 2.62, which is in balanced territory for the first time really in a while. And then the benchmark price is sitting at $591,100, which is down slightly from March and down 1.4% since last April. The key thing that comes to mind when I hear all these stats is balance. But it doesn't mean that everything's calm or predictable. And so let's just dig into the different property types because some are cooling off quite quickly where others are still holding firm, it seems. The first type of home I want to talk about is a detached market, which is down 16% year over year in sales. The benchmark price is $769,000, which is actually up 2.4% since last year. We got inventory, which is over double digits. We got 2,500 units on the market, and then months of supply is around 2.3. So despite more listings and just lower priced detached homes are still seeing tight supply. Now this next segment I want to talk about is apartments. And that record I mentioned earlier in the beginning of this video, well, I want to mention it here because it applies to apartments. Calgary just hit the highest number of apartment listings ever for April, which is kind of crazy. And the unit was 1,086 condos for sale. That's not just a seasonal bump, it's really a signal in my mind. Now, layer that with the rest of the picture. Sales dropped nearly 28% in the apartment segment. Inventory nearly doubled. And when you're talking about months of supply, we're at 3.17, the highest since 2021. Then talking benchmark price is still flat, sitting at 336,000 year over year. And if this pattern continues, just the rising supply, softening demand, we could see condo prices starting to slip by summer. We'll see what happens going forward, so keep an eye on the condo segment. Now we're moving on to semi-detached and row home segments, where the semi-detached market sales were down 25%. The benchmark price right now is sitting at $691,700, which is actually up 3.6%. Months of supply sitting at about 2.55 months of inventory. Then we're talking about row homes, which sales are also down 26%. Benchmark price is sitting at $457,400, which is just up 0.5%. Months of supply, we're sitting at 2.83 months of inventory. The thing to point out here is that these segments were pretty hot over the past 2 years, but now they seem to be cooling pretty fast, but prices haven't dropped much yet. So just watch out for these sectors closely in the coming months if you're looking for a deal, that is. So overall, we are seeing more listings, slower sales, and early signs that prices could start to adjust in certain pockets, especially if inventory keeps climbing, which it looks like it's going to be. But what does this actually mean for you if you're planning to buy or you're planning to sell this spring? So let's break that down. If you're a buyer, you got more breathing room right now than we've seen over the past year. There's more inventory, which means more options. That's not a bad thing. And because we're into more of a balanced market, there's going to be less pressure just to rush or bid way over asking. That said, it's still competitive in some areas, especially if you're looking for an entry level detached home or townhome, especially in the south and northwest sections of Calgary. But if you're shopping for apartments or just something in the higher price points, you might actually have some negotiating power here. Just one heads up though, if interest rates do drop next month, like many are expecting, we could see more buyers, jump back into the market, and that could really shift things pretty quickly for you. And if you're a seller, the days of listed Friday, sold by Sunday are starting to fade, really, unless you're under that 600,000 mark in really hot areas within Calgary. So here's the playbook that I would use: price it right. Like, this is number one. Don't chase last year's peak numbers. I know many of you always try to. Let's not do that. Prepping matters as well. This is not just about cleaning. It's about positioning your home to stand out, right? We got lots of options. Inventory is up 115%. So keep that in mind when you're thinking about trying to stick out. And then be ready for it to take a little bit longer. The homes that are averaging about 29 days on the market right now, which is up from 20 this time of last year. So it's taking a little bit longer to get your home sold. So if you're planning on to list in, let's say, the end of this month or June, now is the time to get your strategy dialed in. We're still in a balanced territory for now, but when you zoom out, you can feel that there's a bit of a tug of war going on in the market. Next up is Edmonton, the only major market in the country where prices are still hitting new highs. Sales are up, listings are up, and yet it's not chaos, it's momentum. And so to kick things off is the total residential sales in greater Edmonton area, which hit 2,710 homes sold, which is up 9% from March, but it's still down 13% from last April. Detached homes just continued to lead the charge, where we have 1,576 detached home sales, which is up 10% month over month. And then semi-detached homes saw the largest month over month growth, or jump, I should say, where sales were up 15.4% over March. And then apartments are kind of telling a different story here. Sales were down 14.9% year over year, though they were up slightly from March. Now, this is where it gets a little bit more interesting, where we're talking about the average price of all the residential homes in Edmonton being $470,000, or just slightly above, which is up 2.1% month over month. Really a solid gain of 9% year over year. And then the detached homes just cracked the $585,000 mark on average, which is up 10.4% from last year. Then we're getting into the semi-detached. We're at just about 435,000 on average, which is up 7% year over year. Then we have row and then townhomes sitting at almost $415,000, which is up 6.7%. And then finishing up with apartments, where we're sitting at $218,330 on average, which is up 8.5%. So as we can see here, Edmonton and all sectors have had a pretty substantial growth from last year, which you can't really say the same about many other major cities within Canada. Now, another stat that's very important when it comes to selling or even buying a property is to factor in how many days does it take to sell a house on average, right? You put your home up for sale, how many days can you expect basically your home to be sold? And so right now the overall average is 30 days. Detached homes are moving the fastest, just at 29 days. Apartments are still the slowest, sitting at 38 days. So if you're thinking about selling in Edmonton, just expect around a month or so to get it sold. Now, I'm sure you're wondering, well, Rich, that's great. All this data is fantastic, but what does this actually mean? And so as promised, we're going to get into, if you're a buyer, seller, what does it all mean? So first off, I want to talk to you buyers. We're kind of in a bit of an interesting spot right now, because prices year over year have substantially increased, one of the most really of the major cities in Canada. But when it comes to month over month, it appears that we're shifting more towards the buyer's market. That's gives you serious buyers out there just a little bit more breathing room, a little bit more negotiations. There's going to be the detached homes. They're still moving quite fast, so don't sleep on those. But if you're looking for value, apartment condos are going to be the sleeper pick right now, in my opinion. They're still very affordable and just less competitive. And I'll leave it off with just keep an eye on interest rates, because if the Bank of Canada does cut rates in June here, which many are expecting that they will, It will increase affordability, which in turn makes home prices go up. So we'll see what actually happens here in June, but keep an eye on that as well. Now, for sellers, this next section is for you. You're still in the driver's seat. Inventory has started to ticking upwards, so keep that in mind, but demand is still relatively strong. But what I will say is that these prices are starting to peak. So it's hard to say if we're at the top right now, but if you have a detached home or a semi-detached home, you're still in the driver's seat. Though what I will say is that presentation and pricing still definitely matter. Homes that are staged, priced right, are moving under the 30-day mark. Edmonton's market isn't red hot or ice cold, it's evolving. And what we're seeing is just a steady spring surge with more listings giving, finally buyers a chance just to move or have more options. And then sellers really just a chance to cash in on that price growth. And finally, over to Toronto, where sales have dropped more than 20%, but the condo segment is kind of interesting what's happening. With rising inventory and softening prices, there's more negotiating power here than we've seen in a long time. So I want to just dive into these sales data because it just shows us a little bit what's going on right now. And so last month, sales were at 5,601 homes, which was actually down 23.3% year over year. So less homes are being sold. The new listings were actually up 8.1%, which totals 18,836. And then when it comes to the average price, we're sitting at 1,107,000, which is actually down 4.1% year over year. Then when we look at the MLS bench price, it was also down 5.4% year over year. And then we're talking about these sales to new listings ratio. So again, it's basically a ratio between how many listings are out there versus how many sales happen. And so it's at 36%, which is still technically in a seller's market because anything above 20% is a seller's market. And then anything below 10% is a buyer's market. And then in between is more of a balanced market. And then the months of inventory is at 4.1. So let's just look at the detached market here first, where the average price was 1.43 million, which is down 6.9%. And then the sales was at 2,556. Then moving on to the townhome segment, where the average price was $1,080,000, which is down 5% from last year. And then the sales was 565. Then the last segment I want to talk about is condos, where the average price point was 678,000, which is down 6.1%. And then the sales for that month for condos was 1,430. And you can kind of see a bit of a reoccurring, or I should say trend here when it comes to prices, that all segments have been decreasing. And then as far as that stat that I mentioned earlier that I found quite interesting was, despite the condo prices declining, condos have made up over 25% of all sales. So that's still a strong sign that first-time home buyers and just investors are seen to be stepping back in, possibly trying to get ahead of this summer rebound. So we'll see exactly what happens. But when we look at the data as a whole, we can see that we got more listings, we have more inventory, and sales are slower. But what should you actually do with this information? So if you're a buyer, I want to start with you first. You now have more choices than you've had at any point over the past 18 months. Prices are softening, and some sellers are starting to adjust their expectations. So just stay on the lookout. Condos and townhomes in particular are offering opportunities, especially if you're shopping under that 800,000 mark. That said, we're still seeing well-priced detached homes in just core neighborhoods are getting lots of attention. So just keep that in mind. And then if the Bank of Canada does lower its rates as expected in June, demand could spike again. So if you are planning to act, now could be a window of opportunity if it does make sense for you in your situation just before the competition comes back. If you're a seller, this section is for you. You need to be more strategic. The market is price sensitive and the days on market are climbing. Those quick weekend sales, they're unrealistic and are becoming more rare. Unless your home is turnkey and just priced to impress, it's likely going to take a bit more time and strategy. And so on that note, this is your play. You need to know your competition, price realistically, and make your home stand out with prep and staging and smart marketing. Because at the end of the day, all these buyers have more options, more opportunities, and you need to stand out. And then to make things even more challenging for you is that the average days on market is growing. Right now it's sitting at 27, but it is growing, so it just makes your life more difficult. And so right now, Toronto's market is in transition. You got buyers who are cautious, sellers who are adjusting, and depending on your price point or property type, your strategy needs to be dialed in. So across Canada, we're seeing a market that's shifting, but not in one direction. We have Vancouver and Toronto are easing more into buyer territory. Calgary and Edmonton are showing momentum, but segment by segment, not across the board. And everywhere, the June interest rate decision could be the turning point. Whether you're planning on buying, selling, or just watching closely, this is a market that rewards preparation and patience. So what should you do next? In my opinion, you need to keep an eye on interest rates. It's no brainer. Track inventory trends, especially in your local area. And remember, the market doesn't move in headlines. There's plenty of headlines that are misleading. It moves in your neighborhood, so you need to know what's going on there and get specific data to where you are and where you're planning on moving. If this helps you get a clearer picture of what's really going on in the market, hit the like and subscribe button so you don't miss out on future videos. And if you want to see what happened last month where trends are still shaping the market today, I'm going to link that video right here. And while you watch that, I'm going to go fly some drones.